party last night at Vista. Everyone feeling okay today? Thank you for joining us last night. My name is LaCentra. I'm the Chief Marketing Officer at RCN Capital. Today I'm going to talk about the tremendous opportunities that exist for originators and brokers when using private money and private lending options. So let's get into it. The market obviously is extremely turbulent right now. For originators and brokers, there's probably uncertainty in terms of what business is going to look like in 2023. I want to highlight some of the opportunities specifically in the investor space right now. Investor purchases are still elevated above pre-pandemic levels. So that really bodes well for those investor opportunities at this point, because even with turbulence in the housing market, those investors are recognizing that there still are opportunities, whether in fix and flip or long-term rentals. We're also seeing that home flipping is at the third highest level in the past decade. So again, just looking at those opportunities that are existing, and even with rates being higher than expected, appreciation capping off, inventory levels maybe starting to rise, there are still tremendous opportunities in the housing market and in the real estate industry. Also, just looking into the future, there are 125 million households in the US, and 35% of those are SFR rentals. So think about that. That's a tremendous number. And even thinking about folks that may be looking to purchase a home versus renting, renting is still one of the most popular options at this point, and especially in probably the first half of 2023, we're going to continue to see that trend as homeowners or potential homeowners are a little bit wary just of the turbulence that's being experienced in the market right now. Also, over the next 5 years, we're anticipating approximately 7.5 million additional housing units demand for that, 10% above the average annual growth over the last 10 years. So again, those numbers are increasing. So even with the doom and gloom that you guys are probably seeing in the marketplace, there is still tremendous potential. Again, talking to the single family rental market too, there's going to be approximately 810,000 new households that are going to be signing leases. So not looking for that homeowner solution, but really looking for that rental opportunity at this point. And also, again, just to highlight the projections for the number of homeowners versus those rental households to really drive home just what kind of opportunities exist in the single family rental space particularly. Investors recognize this opportunity. So if you are not working with investor clients, that is really where you should be shifting your focus, especially as the residential space is struggling at this point. And just take a look at this. There's tremendous demand for alternative lending products. So within the residential mortgage space, the demand and searching for hard money products, non-QM products, private lending products is skyrocketing. So yourselves, brokers, originators, you folks are identifying that these opportunities exist and there is a need for alternative financing options. The traditional mortgage space is going to be in turmoil for a little bit, especially with the rate increases that we've seen. Until that levels out, it is in your best interest to diversify what product options you have for your current customers, whether that's in private lending, whether that's hard money, whether that's non-QM. Tapping into that investor clientele is going to really be critical for your business going into 2023. So you're probably all thinking, as originators, as brokers, how do you capitalize on the opportunities that I just pointed out, whether in the fix and flip space or long-term rental space for investors? It really comes down to diversifying your product offering. So as I mentioned, looking into those options for specifically investor financing, whether that's in private lending or non-QM options, and then do your research to find a proven lending partner. So, I mean, obviously, you folks are tapped into the market. You've seen what has happened over the last 6 to 8 months, probably with some of the lenders in those alternative lending option spaces. whether they've come into the market or they have closed their doors, it's extremely important that as you're trying to find those products to diversify your offerings, you're finding a proven partner that is trusted, that knows what they're doing, that has longevity in the space. So obviously, we're hoping that you look for RCN Capital's flavor of financing. So we are a direct private lender which specializes in loans specifically for investors, whether they are short-term options, looking at bridge and fix and flip, or long-term options for long-term rental properties. So these are commercial loans which you folks can originate for residential properties. So it's the types of properties that you are already familiar with, but a much easier type of loan for you to utilize. And by that I mean private lending is not hearkened to the specific guidelines and things that the residential space it has to rely on. So thinking about that, that means you have major referral opportunities where you don't necessarily need to be licensed in certain states as you do in the residential space. So this opens up your opportunity to make more money really in 2023 because you can branch out into different markets that you might not have branched out into in the residential space due to licensing requirements. You can branch out into different property types, whether that be single family investments or multifamily investments. And you can branch out into a new customer type, which is that investor client. Our types of loans can be used for purchase. They can cover purchase as well as rehab costs. We also offer options for refinances as well as cash outs. So tremendous amount of opportunity and varieties of financing options that you can offer to those investor clientele. And also just looking at the coverage, as I mentioned, choosing a nationwide lender like RCN gives you the opportunity to originate these types of investment loans throughout the country. And as I mentioned, because you are not necessarily required to be licensed in most states while originating commercial loans, you have the opportunity to earn referral fees and fees across the country, which is a tremendous opportunity for you folks, especially as you're continuing to try and build your pipeline in 2023. So getting into the specifics of what we offer for brokers as well as loan originators that are looking to either refer or start originating these types of deals with a lending partner like RCN Capital. So as I mentioned, funding options for the types of clients that you may have previously turned away. So obviously folks typically have their focus in the market in terms of where they originate loans. You might not have a private money or hard money lending solution in your bucket right now, and you might be turning away deals. That is silly because working with a proven partner like RCN, you can have either little involvement or full involvement. So whether you are super comfortable with our products or not, we are going to keep you protected and compensated on your transactions, which is huge. So as I mentioned, we offer simple options for brokers in terms of compensation on deals. Typically, if you're having a more minimal involvement in a scenario, passing on the deal, passing on information of your client over to RCN, we would consider that a referral transaction where we can go usually about a half point on a deal like that with minimal involvement, passing over customer information, and our team of loan officers will be able to help originate that loan. We also have the option of doing more of a hands-on brokerage scenario, so we would be relying on you folks to be able to collect documentation, really lead your clients through that particular process all the way to closing, and then you have the ability to work with your loan officer at RCN Capital to determine the amount of points that you want to charge on that loan. So very flexible depending on where your pipeline currently sits. You don't necessarily need to make one selection where you would say, I'm only working on straight referral deals versus a more hands-on brokerage scenario. It can be a sliding scale depending on your capacity and your relationship with RCN. So it can go back and forth with any deal, honestly. And then in terms of compensation, All of your fees are going to be disclosed on the commitment letter up front. It's also going to appear on the HUD, so there's no surprises for your clients at any point in time. And then a check or wire is going to be sent to you directly at closing. So it really cannot be more easy than that, truly. And so for this portion, I really want to get into a more detailed investor scenario so that you folks can kind of identify and see the typical situations that our type of financing is utilized for. These may be scenarios that have crossed your desk that you have not taken advantage of, but I think really going in depth into this type of scenario can show you guys and help you identify future situations where this type of financing would be applicable. So we have a client that wants to purchase a property, renovate it, and then ultimately hold it as a rental. So this particular client has a 750 FICO and has experience. So they have done 3 previous flips and they currently own 2 rental properties within their portfolio. We also have the property information. So typically this would be the type of information that would really make your deal go quickly with RCN Capital. We're going to be looking at purchase price. In the case of a fix and flip, the renovation budget, the projected after repair value for the property once it has been renovated. With this particular scenario, this person is obviously looking to ultimately rent this property and hold it long term. So projected rents for the property, annual insurance, property taxes, and then location of the property. Zip code is great for an initial first quote. Obviously, property address is going to be much better. So how would we look at this particular scenario? For a situation like this, with an investor looking to flip a house and then ultimately hold it as a rental property, we would have a renovation loan that we would originate as well as then turning it into a rental loan. So this would be a 2-loan scenario, and the great thing about this for you as originators or brokers is that you will be compensated for each of these loans that your investor client brings. So this is not the type of scenario where if your investor fixes up the property and then wants to refinance with RCN into a longer term loan, you're cut out of the deal. You will be along for this ride the entire way through. You have the opportunity to be compensated on that first renovation loan as well as that long-term rental loan. So you really need to be thinking about the potential opportunities where unlike traditional residential mortgage transactions, you're only being compensated on that initial purchase or refinance. This is an opportunity for you to make money on 2 separate loans with these types of clients. So for us, our typical renovation loan is going to be short term. It's going to be 12 months. On average, we see a lot of our investor clients that are fixing and flipping homes complete their loan or pay off their loan in about 9 months. Our loan amounts range from $50,000 up to $7.5 million, so a lot of flexibility in that regard. Minimum FICO starts at 620, so again, it's not a FICO-driven product. We are really looking at experience, the investor, and the property itself. For rates right now on the short-term side, they start at 10.24%, and then LTVs without renovation, we're looking at up to 75% of the purchase price. For a home that has a renovation component, we can do up to 85% of the purchase price, plus covering 100% of those renovation costs. So extremely competitive options for your investor clients to be able to utilize to finish their projects. So as I mentioned, particularly with our short-term renovation loans, these are going to be heavily based on the experience level of the client. And what do I mean by that? So we're going to be looking at how many flip transactions they've completed or how many rental properties they have owned in the last 3 years. That's not to say that we don't work with new investors, we do, but for the more experienced folks, that's where they're going to be able to get those higher leverage points and those lower rates. So something to keep in mind. But the great thing too is if you're starting out with a newer investor in the space that wants to go on that journey and grow their portfolio, as they get experience under their belt, they're going to be able to achieve those higher levels of LTV, those lower rates, as they continue to get properties under their belt. So it's something to keep in mind, especially if you're working with those newer investor clients, to be able to articulate that. So for this particular scenario, we would be looking at a loan of $850,000 for the purchase, or excuse me, 85% of the purchase, which is $850,000. So we would be able to do $722,500 as the max purchase loan amount. Then we will cover 100% of the renovation in this case. So our maximum loan amount for a deal like this with an investor client that has that level of experience would be $822,500. So very easy to be able to do that kind of math and look at a basic scenario and quote out what you are able to offer your client and if that makes sense for their project. And one of the great things is we have a technology solution. We utilize Bridge Loan Network, which has a pricing component. So this is actually generating what you would be looking at and would be able to have access to within our system that you could show a client. So extremely easy to be able to take that basic information that I showed at the very beginning and then populate something like this. So showing the max loan amount, the initial advance, what their interest rate would be, as well as what the total points on the scenario would be. So being very transparent about what they could expect as they go into the process of originating this loan. Also looking at just closing costs and the estimated liquidity requirements. So really having that full transparency with your client going into this. So for our particular renovation process, we disperse our renovation funds in draws. There are no renovation funds received up front with our particular loan products. A client is required to send in a draw request form, and funds are usually released in about 5 to 7 days. So again, a pretty easy process, but we do fund our renovation costs in arrears. The good thing about that is that we do not charge interest on your client's loan for funds that are not currently in use within that renovation budget. So that can definitely save your investor clients quite a bit of money over the life of their loan too. So just to go through the renovation process quickly, the client begins working on the property and does about $10,000 worth of work. They send in the request to our servicing team. We have an in-house servicing team which handles all of these draw requests, so it keeps that process very seamless and smooth throughout. RCN will send out an inspector to the property. The inspector will confirm that that amount of work has been done and then release that percentage of funds to the client. So a very easy process from start to finish. As I mentioned, having our own servicing team in-house makes that even more seamless so that you're not having to deal with an external vendor in that respect too, or your client's not having to deal with an external vendor. So your client has completed that, the renovations on the property. What is the next step for them now to get out of that renovation loan and into a longer term loan? So we can refinance that property as well. With a longer term solution, we have 30-year loans as well. So what would we need from you in order to make that next transaction possible? We're going to need the current value, the existing loan amount, so again, all of this information we're going to be able to have, projected rents, annual insurance, annual taxes, and HOA dues if applicable. So again, as I mentioned, one of the most attractive things about working with investor clients in scenarios like this is that you will get paid on this second loan. And we have the majority of information needed at this point to be able to easily transition them into a 30-year long-term loan. This is really a no-brainer for you guys to be able to walk your clients through this process and get compensated from it. So in terms of what our 30-year loans look like, we can do $65,000 up to $1.5 million. a minimum FICO of 680 at that point, so definitely something to be cognizant of because the FICO requirement on our shorter term loans is a little bit more lenient than what we're looking for on our long-term loans. Rates starting at 6.75, so extremely competitive compared to what we're seeing in the residential space right now. And LTVs, as you can see, purchase up to 75%, refinances up to 75%, and cash outs up to 70%. So looking at the overall landscape of the market right now, this is one of the most competitive products and competes with most of the products that you've probably seen within the last 6 months or so. So still an extremely attractive option for folks that are looking to hold rental properties long term. So looking at this particular scenario, this individual has fixed up the property, looking for this long-term loan now. We would be looking at 75% of the current value, which would come up to about $900,000. We already have the existing loan amount with RCN, which is a little over $801,000. Estimated rents at this point is about $6,400. We also have the tax and insurance information. So we want to make sure that your investor is able to make money on this particular product when they put that long-term tenant in place. And again, utilization of the technology that we have allows you to be completely transparent with your clients throughout the process in terms of what they will be looking at for their loan. So again, this is something that will be populated within our system that you can show to folks, showing the suggested loan terms, the DSCR in terms of the cash flow for that individual, as well as their projected rate and the points on the deal. Again, being able to highlight the total estimated costs and liquidity requirements. We feel it is so important to have transparency with your clients so there are no surprises at the closing table where all of a sudden we're asking for more money or anything like that. That there are lenders in our space that give private money a very bad name, so transparency is key for our process, and we want to make sure that you have all of the tools at your disposal to be able to show this information to your clients throughout the origination process. So that kind of takes it to the end of that particular scenario. Just some common questions going through through this process. As I mentioned, being paid on both loans. That is such a huge opportunity for you folks, especially for those of you that maybe have not worked with investor clients. The amount of transactions that investors typically complete within a year versus the amount of homes that a home buyer would purchase obviously is much higher. So the ability to double dip on scenarios like this makes this a particularly attractive space. For our long-term rental loans, can a client buy down the rate? So for your individuals that are more rate conscious, we do have the option to buy down rate as well. So I know obviously right now it's a more rate sensitive environment, so there is that opportunity too. Do we require tax returns for your clients? No, we do not. We're really just looking at the cash flow of the property at this point in time. Can points be rolled into the refinance? Sometimes that's something that we would need to look at on a case-by-case basis. Does the client have to pay debt service at closing? No, we just need to see that in their cash reserves. So again, just kind of showing the flexibility and just ease of these types of products for those types of clients. Can a client do multiple deals at once? Ooh, yes, sir.
Would the 401k count towards the cash reserves? Anything like that?
Yes, it would.
50%.
50%? Yeah, so up to 50%. Can a client do multiple deals at once? And I think, again, I can't harp on this enough in terms of the amount of opportunity there is with this. Yes, a client can be working on multiple transactions at once as long as the numbers are making sense, obviously. Do we need a second appraisal after the renovation? So yes, this is actually a pretty important point where we do require a full appraisal for that initial fix and flip loan. We're going to be looking at the as-is value as well as the after repair value. Once that project is completed, we will require a full appraisal for that second refinance or long-term loan. So something to be cognizant of. And the minimum time between a purchase and a refi, we're going to be looking at 3 months of seasoning. So for you folks, as I mentioned, obviously technology was a component that we offer to our brokers or referral partners to be able to allow you to have greater transparency with your clients, but we also do offer free training for brokers and originators that are looking to get into this particular space. We offer a full online course content called Amplify. So we have courses that range from kind of the introductory level with our particular loan programs all the way into more advanced, going into really more detailed scenarios, kind of like what I showed here, so that you can become experts of these types of products. We want to provide you with all of the training possible so that you can articulate to your clients the types of loans that we offer and walk them through these processes to be so that it is seamless as possible. We want to make you guys look good. We know that your reputation is everything, so we provide you with the tools you folks need to be able to be successful. And there is an email on here if you want access to that Amplified training. We also have flyers at the booth with QR codes that you can scan to get signed up as well. So as I mentioned, especially with the market as it is right now, if you're looking for opportunities to increase your pipeline and grow within 2023, we strongly recommend that whether you work with RCN or another private lending or non-QM financing source, diversify your product offerings, really look into those investor opportunities, because that is going to be a game changer for you folks. So for any of you individuals that would like to start the registration process as a broker with us, we have a QR code on the screen. Obviously, there's also the registration on our website, so we strongly encourage you folks to sign up. It is a very easy process. There is probably about 10 questions in terms of the form you have to fill out. We will send over our broker agreement, which you folks can look over, and then you're able to start originating with RCN immediately. We'll introduce you to your loan officer. We'll get you onboarded with our particular software. You'll have access to those training resources. Everything you need, we want to be that resource for you every step of the way to make this as easy as possible to work with us. Does anybody have any questions? Yes?
Yeah, on that 3-month seasoning from purchase to refi, does that include cash out refinances?
Yes.
Yeah, it does.
Yeah. Mm-hmm.
Did I read one of your slides correctly? It's on your refi, you had a 5-year prepay and 2 points to get 6.75 rate?
So on that particular scenario, that was what was populated through our system, but we do have a minimum of, actually no, our prepays are a sliding scale. So we have everything from a 0 prepay up to a 5-year prepay. It is dependent on what your client's looking to do. That being said, if you choose a lower prepay, the rate is going to increase too. So something to be aware of. As I mentioned though too, we do have basically a sizer within our technology that can show the different options and what pricing is going to look like at the different prepay levels. So definitely something to be cognizant of and walk your customer through depending on where they want to land on rate and obviously prepay. Yes?
Do they have that option on every deal, or is it, a certain deal set where it is definitely a prepay?
No, so they have that option on every deal in terms of long-term, and then for our short-term programs, there is no prepayment penalty. Yes?
Are there any limitations on like geographical areas, like for getting an inspector out to a certain town or city?
So we have seen some delays in terms of inspections and appraisals too, depending on just where they are located in the country. but there's really not any sort of restrictions in terms of what we're looking for. If we had originated that loan, we should be okay in terms of inspections, and we do have different inspection companies that we work with to be able to work with us throughout the country. Any other questions? Yes, sir.
Are you strictly residential or do you do commercial properties as well?
So we do offer financing for multifamily properties, both short-term and long-term options, but aside from small multifamily properties, short-term we have a little bit more leniency. On long-term we can go up to 9 units currently. Outside of those multifamily properties, we do not currently offer any additional financing options for true commercial properties though. Any other questions? Alrighty. Well, thank you all for your time. We have a whole team that's going to be at the trade show booth today. So if you want to stop by, get more information on our programs, or talk with our team, please see us. Thank you so much.